Hi guys, hope you're all well. Can I just check you can see my chart? Great stuff. Let's get this session up and running and try and just sift through the bloodbath that was yesterday's market, because I mean risk assets just got an absolute killing yesterday across the board, and we talked about this at length through yesterday's session, but you know, it never ceases to surprise. We know how quickly sentiment can change in these markets, but when it switches and swings over such a short space of time, it always amazes. So if you think back to just 1 week ago, so Thursday last week, you know, we'd had some pretty good economic data last week from the ISMs. We'd had some good ADP numbers, ADP employment report, and we were shaping into the non-farm payrolls on Friday, and we were thinking, you know, optimism, confidence about recovery. Finally, we might see this labour market getting kick-started into action. Have a look at my daily chart here, and on Thursday's session we set a new high since the 21st of June, so it was a new kind of 6-week high at the time, just at 11.28, basically just a whisker underneath this key level, the 21st of June high at 11.29.50, and we were teeing up for the good non-farm payrolls to give us the momentum to break out of this 3-month range. Okay, and literally just a handful of sessions later and everybody is suddenly talking about double dip recession. Everybody, it's doom and gloom, and recovery is being questioned, and the sustainability of it and the nervousness about it has just escalated beyond measure, and this led to yesterday's session. And you can see the huge red candle we got. We opened on the highs yesterday, we trended lower all day aggressively, and we closed on the lows. You will not find a more bearish day than what we got yesterday. It was aggressive, high volume selling across all risk assets, and sentiment has just been absolutely destroyed just in a couple of sessions. So, you know, why? First of all, it was the payrolls number, of course, last Friday. Then it's the Chinese situation. First of all, their trade balance on Tuesday morning, showing a big decline in imports, so question marks about the Chinese recovery. Then we had the Fed, of course, being bearish, you know, talking about the uncertainty about recovery, saying that things aren't as good as they thought it would have been, and of course then the extension of quantitative easing. And initially on that, I was talking about this in yesterday's briefing, initially off that extension of quantitative easing, we had the risk assets rallying, but it was so short-lived, and yesterday's session just turned into a bloodbath as people start worrying about a double dip again. Now what this has done, it's perfectly confirmed our 3-month range. Okay, so I'm showing you here, really you go back to mid-May when we entered into this range properly, and we've been in it for now 3 months, and the bad news we've had over the last couple of sessions has just confirmed the top of the range. So these levels up around sort of just underneath 11.30 now are a huge barrier to the upside. They were before, and now they're even stronger. Now we're trending lower, you know, we're into the mid part of this range, and things are going to get messy, and until we get better news on the macroeconomic level, you know, these markets will continue to come under pressure. So for today's session, if I move to a slightly shorter time frame and look at, let me just zoom out slightly from that. Today, you know, even after the huge scale sell-offs we had yesterday, we're still bearish, and we have the view that we will consolidate yesterday's losses. That means, you know, we may well range around about the range we've already got in place today, because we closed around about 1087.50 last night, but the Asian session after the close we had another accelerated move lower, so the low for today is right down at 1073.25, which is just one tick above S1, which is our first target for today. So we'd be looking to get short of what was the the high at the European Open this morning at 1087.50. We're looking for this range that we've got in place today so far to play out. That may well be the consolidation zone, consolidating the huge sell-off we had yesterday. And we're, I'd say for stocks we're neutral with a short bias. We're neutral because we've had such an enormous move yesterday. Can it go further? Well, yes, it can. And if we get bad jobless claims numbers at 130, it will go lower. Okay, but for now our view is that we will consolidate yesterday's losses. And we have a short bias, looking to get short if we got back to that European opening level at 1087.50. First target S1, second target S2. Believe me, we can get to S2, even though we had a big huge move yesterday. We can have another big move today. You know how sensitive these markets are to sentiment, and when the sentiment is so strong and so negative, you can see what happens. The markets will always move downwards quicker and more aggressively than they move upwards. And we're already now, if you take today's low, that's more than, it's over 50 points off the highs we saw at the end of last week. So a 50-point sell-off, in just a couple of sessions, and that demonstrates how quickly these markets can move to the downside when fear and panic begins to spread, and that's what happened yesterday. Let's look at the dollar, because that has been the most interesting market of the week. And the dollar reaction, we know what happened on Tuesday when the Fed announced QE. It spiked higher, as you'd expect, dollar weakening. But since then, the reversal has just been meteoric, and we're 500 pips. We're trading 500 pips underneath now Tuesday's high. Just in one main session, or in 48 hours, euro dollar's come off 500 pips. Actually, that's not right. It's just over 400 pips, isn't it? Sorry. But you can see what's happening. It's the same with stocks. Aggressive sell-off as the flight to quality trade comes back in force. Okay, so people moving money out of riskier assets and putting them in the safe haven assets, which is the dollar. That's what's driven this move really right from Friday's high. The non-farm payroll high on Friday was at 133.34. Okay, that's where we've had a 500 pip move. Sorry, so off Friday's high, we're now over 500 pips underneath that level. But this has been a flight to quality move, and a very, very aggressive one. And again, we view the market today that we'll consolidate these losses, and that we have a bias to the downside. This trend is very strong, it's very powerful. There is no reason in the market so far today to generate a retracement of yesterday's losses. Okay, the sentiment is still very negative. To get a retracement of yesterday's losses would require a very good jobless claims number, and the likelihood of that is low, I would suggest. Jobless claims has been very disappointing for a number of months now, and we're expecting that to be the same today. Just on the dollar front, because obviously the euro dollar's had huge moves, but I want to talk about the Japanese yen. So the dollar yen market, I want to bring up a very long-term chart here. Yesterday we made new 15-year lows for the dollar yen, and I want to point out really what the next major target is for this level, for this market, would be that low, the all-time low in quarter 2 of 1995, and that's below 80. Okay, so that's at 79.70. That's really the next major target. Now we're through and underneath the low that was set in quarter 4 last year. Really the next major target is that low from 1995, and that's at 79.70. So if we see this flight to quality scenario continue in the coming weeks, then that's a major target, and we've already had the Japanese government talking about their